All right, hello everyone, and welcome back to another Maddox Market Musings. Roy and I are delighted to have you join us this evening. Thank you, and we hope to share some of our thoughts on the market since we've seen you guys last month. Certainly a lot has changed. I'm going to go through and talk about the comeback that the market has staged recently after what I'd say was a more than shaky November. We've rebounded and perhaps set the stage for something perhaps a nice rally going into the end of the year. We're going to go through and for my portion, I wanted to kind of walk through exactly what we were seeing almost day by day over the last month since our last meeting, because I think it's interesting and maybe constructive to see what maybe explain what we're seeing, how we're seeing it, and why we have acted, why we've positioned ourselves certain ways throughout the last month of choppiness, and how we were, I think, decently quick to get defensive, and then relatively quick to get offensive again, because we try to just bend with the market, not follow the news too closely, or be swayed one way or another, and just follow price action. And we'll show you how and why we interpret things certain ways. So I think it should be a good instructive video to go through those things. And then, of course, Roy, at the end of this, we're going to go through what stocks, and we'll talk about what we own and what's on our buy list. And those are really the key ideas that we're looking at. And then feel free to chime in at the end with your with what you're watching, or anything that you might be interested in taking a look at. So yeah, what we're about. We started as a meetup group in Charlotte, North Carolina. And since COVID, of course, that's expanded to the whole country and the whole world, just because we can meet virtually. And we just try to connect with investors. That's how it started many years ago. And Roy and I have been hosting this for many, many years now. And a lot of the key ideas and what's been so influential to Roy and myself was How to Make Money in Stocks by William O'Neill. That book um, was really instrumental in making, in how we see the world and how we execute on our process, trying to find the next leading stocks to change our lives, and to change our clients' lives, and hopefully we can, together with this community, we can help do that, and help each other to find the next big winners. That's always what we're looking for. This is a presentation that Roy and I put on. It's educational, it's for entertainment, but it's not investment advice. We'll talk about what we own and what we're doing, but it's definitely not a recommendation for you guys to do anything. But consult a financial advisor if you have one, to make those decisions, and invest at your own risk, of course. So one of these key themes that comes from that William O'Neill book, How to Make Money in Stocks, is can slim. And it's just a simple way for that William O'Neill would boil down the key criteria that he looked for. And he'd go into great length in his book about the each letter of this can slim acronym. And so I just wanted to show this always as a little bit of background. This does capture a lot of the high level important things that we are looking for in leading stocks. For a lot of the presentation that today, we're going to talk about market direction in particular. We often focus a lot on that because if you can decipher the direction of the market, most stocks, probably three-quarters of stocks, will follow the direction of the overall market. And for us, always, we give this little review. Our process, what we talk about is technical analysis, fundamental analysis, and macroeconomic analysis. We find that these three things are essential to really mastering and understanding what you're, how to invest at a high level. A technical analysis, that's talking about price primarily, and trend. Sometimes, if we're seeing interesting things, we'll talk about breadth and sentiment. Not as much today, but and other things like ratio analysis we'll sometimes get into. But this is, I'd say, this is really all you need for technical analysis. Anything more than this is maybe a bit extreme. sometimes you can be overwhelmed with indicators, but this is a really good list that is comprehensive but not overwhelming, I think, to look at. For fundamental analysis, again, this CAN SLIM acronym that comes up again, um, that's looking for those high flying. The next leaders are going to have really strong quarterly earnings growth of 25%, annual earnings growth of 25%. It's going to be, the art of this kind of comes to new, the N. You're looking for companies with new products and services and changes in the industry. So you're just doing your best to figure out what companies are changing the way we work, live, and play. Supply and demand, that's when we're looking for big volume cues, because when something impactful happens at a company, the institutions will pile in. And, one of the key template stocks there was probably NVIDIA last year, where you could see just, unbelievable demand after several earnings quarters when the stock was up, 20%. And it's just institutions that are positioning themselves for, bigger moves. Leaders and laggards. So, sometimes it's tempting to find the second best name and think it's going to play catch up. We don't particularly like that strategy. We like to buy the stock that's leading the pack. And then institutional sponsorship. It is interesting. I think there's definitely that dynamic changing where there's a lot of retail participation and a lot of online communities that have gathered, right, to perhaps move things even a little bit. But institutions are really still, we're talking about hundreds of billions of dollars at a lot of these institutions that make big bets and are moving the market overall. So, that boils down really a lot of the fundamentals for us. And for macroeconomic analysis, we just want to keep a pulse on this. It's definitely not it's a distant third really for how we allocate and make our investment decisions. And or largely that's because price moves before the macro narrative or the macro data changes. Price anticipates all of this. So um, we still do want to be aware. We are constantly monitoring the data just to understand. Is the economy growing? Is the labor market deteriorating beyond a point that's going to be critical to unemployment? Is inflation accelerating or decelerating? And all that stuff really just goes into your inputs to understand what's the Federal Reserve going to do, because we know that is the old mantra, don't fight the Fed. That's a lot of what we're just trying to figure out with when we look at the macro. What is the Fed going to do next? And of course, we've got another big meeting for the Fed tomorrow, and we'll talk very briefly about that, since it's almost certain what they're going to do tomorrow. So now I'm going to go through just some overall thoughts on the market, and I've been updating this chart. I just find it helpful, perhaps, to see what's been driving the market, what different things have been moving, have been price moving for the market over the last, basically since the bear market, right, in February started. Since we met last, right, in November, we've had, it's been quite a choppy environment. We can see up here the market nearly peaked, or at least made a short-term peak up here as Trump was touting a trade deal with China, right? And basically ever since the bottom, the market's been anticipating and trade deal after trade deal with this country and that country, until it all culminated to this day, right? Where I think it was a Monday or Sunday that he announced it, and then we opened Monday here. And we got defensive quickly with that, when we broke, following the most widely anticipated trade deal announcement of all time. Right, you can see the market got shaky back here in October when he tweeted that China had gone against its word and was restricting trade in rare earth minerals, and then we just continued to rally higher and higher. And I think month's video was also interesting because we went through a lot of the things that kind of concerned us with the topping action. Um, right here at the start of November, with a bunch of different good news getting priced in all at once, it seemed, and then the market failing. Um, this key day, this was NVIDIA earnings where we had a massive, nasty, nasty reversal day, where we were happily on the sidelines. But, this was a concerning day. And, the market has since rallied back since then. So, I'm going to go through basically what we were looking at from this day forward to today, to talk about what we were seeing and why we were taking certain actions. And last month too, we talked about the volatility and this FFTY we use as a barometer for our strategy because it's these high volatility, high octane, high growth stocks, often pretty speculative names in this FFTY. And we've had just really a lot of pullbacks. And we talked about this change in character in the FFTY in October. That was a signal that was just a lot of volatility to stomach, and something important was going on. It had become distribution dominant. And we used an opportunity to exit on a harder break after this, what looked like to us sort of a double top. We exited 90% of our positions, and went to 90% cash on, I guess it was November, maybe 2nd. And then, dodged more, further carnage over the next couple of weeks there. So, again, last month we went more into detail about all these things that were happening in October and, what signaled to us to get defensive fast there. Okay, so November 4th, that was the day that we have marked here as sell. This is when we went 90% cash on the Qs. A lot of the reason for that was what we saw in the FFTY. The FFTY, a very different chart than this QQQ. And so, we saw under the surface the stocks that we owned, the volatility there, and this break following, the China trade deal announcement. This break in the market for us was a signal to get highly defensive, and we wanted to act quickly because we can, and that's what we did on that day. Let's see. Then if we go forward, nothing there. Now I'm going to keep annotating and moving forward. November 6th, then it happens. We get a sell on the MACD. That's something that this is one of the primary indicators we look at for technical analysis. It's it's a simple indicator. It's a momentum indicator, but it helps keep us objective. And so, to us, that was maybe further confirmation, right, that the market had changed under the surface. We had more follow through to the downside over those next few days. We almost broke that 50 and we saw support there. So we actually had a really good close. I believe that was on a Friday. We had we had a strong close on that Friday, to be sure. On this Monday, this was when we had an announcement of the government shutdown coming to an end, right? That was when real strong rally there, and obviously some of that on Friday was some anticipation, some maybe insider knowledge to know that was going to happen, and so we rallied strong. Roy and I actually sat on our hands this day and did nothing. If we had to, we would have obviously given it some time to go sideways, but with everything that we were still seeing in individual names, we did not just want to chase a gap up, and we decided to sit on our hands that day, wait longer, give it some time. The next day, Tuesday, nothing changing on a technical level. Decent support right there, it looks like. And then Wednesday, some people I'm sure could have gotten sucked in right here on Wednesday, as you might have been taking out some of that, really short pivot. Again, Roy and I sat on our hands, waiting for more confirmation, really, and again, a lot of that comes down to individual stocks and how they were acting. So we sat on our hands there, and felt somewhat validated. I guess on this day we revisit the 50-day on the indexes, and then this is another Friday where things the market is it's under pressure, right? We can see this certainly here. This is another Friday where we broke the 50 at the open and had another good close, another strong close. I'll also point out, over the course of these probably 10 days or so, I'm not talking about it here, the VIX was, likely above 20 or so, probably in the 20 to 30 range. Um, and that's something that we like to key off of, like understanding what kind of volatility bucket we're in. The 20s to 30s is, a very choppy environment. And so that's probably where we were right here. But, the fear is palpable as you're breaking the 50-day moving average and the indexes. But once again, we had another pretty strong close on that Friday, back above the 50. So no, that's not an unequivocal sell signal for us on the indexes, right? So while we exited the stocks here, um, the indexes are fighting to stay up the whole time here. Okay, finally though, this is the Monday, I believe, after over the weekend, you get this crossover signal. This is something Roy and I have talked about over and over again. We've probably talked about this for hour and a half on a Trader Line conference, over the 2 or 3 years ago too. This is a guardrail we talk about, the 21-day below, or the 10-day in green crossing below the 21-day. That to us is a change in character. Something to notice. While this is 1, 2, 3, this is just 4 months, of that bull market run we had last year. Notice how the 10-day is above the 21-day the entire run up. And if we were to zoom out, you'd see that that's the case all the way back probably to May. So, you had 5, 6 months of a strong bull market, and with that 10-day never violating the 21-day. So, to us, this is just stacking up losses for the index. Telling us that yes, we were right to be defensive here, and we get that other third signal. And this is the order of things that we'd expect. I just want to point out too, this is exactly the order. This signal here, right? Nothing wrong with the indexes. It's the leading stocks that are topping, right? The leading stocks that are rolling, and that's the first signal, and that's why we have to get out because that's what we own, right? So that's the first signal, followed by the MACD, this momentum indicator, and then the third one will most likely always be this moving average crossover, just because of the way these things are constructed. We go forward and we follow through. The indexes are now below the 50. For us, that's an easy. Now it becomes an easier couple of days where we are sitting on our hands further, right? It becomes a little bit easier. And then so nothing here, living below the 50 perhaps. And then this happens to be the day before the Super Bowl of earnings reports again. So the next day here is going to be the big NVIDIA report. And by the way, what fueled this run in October was in a lot of NVIDIA commentary, right? They had their GTC. And they were talking about how they were going to do 500 billion in revenue next year, which was a lot higher than the 380 billion or so that consensus had. So that fueled a lot of that run. And we were hesitant, obviously, to get ahead of this massive number, especially thinking, okay, most of this might be priced in with NVIDIA. So with that, it was they said everything we expected them to say. Awesome quarter, growth couldn't be better. They're executing. Gross margins are high. They beat the number everywhere, and 2026 is going to be unbelievable. And this action was really, really nasty on that index. So there was no plunging in here. A key reversal day. where we had almost a 5% swing from high to low in the index there. So really, I mean, to me, this is where this is where I wanted to be bearish, right? Um, but in reality, oh, sorry. Here's a look at Nvidia. I put in here too. This is the way this stock reacted to the earnings, with an 8.1% decline from the high to the low. Right. So everyone talking it up, unbelievable quarter. I'm sure every sell side analyst was upgrading it and raising target prices, but this is, that's a key reversal bar and super ugly and important. So now we've got all this. That key reversal day is another, issue that we have to overcome, that the market is going to have to overcome. But hey, be careful not to get too bearish, because you're not going to, more than likely, you don't just go into bear markets, and you certainly, I don't want to say certainly, but you almost never will go into two bear markets in the same year, right? So right here, while, we probably took out the lows the Friday morning, we again had another good Friday, another strong Friday, and closed green, despite the pretty negative reaction there. So now, okay, we've got a low in. Here's something Roy and I noticed. We noticed the price phase. So the price phase is a component of the MACD. It's that black line. And Roy will often show it on his other charting platform, where you can see it really, really clearly, if it's higher or lower than the previous day. But this is the day, November 24th, that we got our first up day on the price phase. So this momentum indicator turning first to the upside. So for us, being our objective technical analysts, we have to respect that and realize that is, could be the very, very first step saying that the trend is going to recover here, despite how nasty that bar is. That's what we saw. We saw that the price phase turned up. I also wanted to point out this, because this is, to me, was one of the more unbelievable things too. The small caps took out the highs in 2 days from that key reversal day. So what looked like the weakest index, which was well below the 50, all of a sudden 2 days later staged to come back and recapture the high there. Okay, so that's another thing that we had to notice and respect for that. The next day off the low, so 1, 2, 3 days off the low, the indexes are back above these moving averages. They're back above the 50-day, the 21, and the 10-day. So, okay, that's another step in the right direction. 4 days now off the low, the Qs close above the high of that key reversal day. So, despite every, I look at that and I think, oh my God. And I'm actually going to show you what happened. And by the way, in February, I think it was February 26th or so of 2025, we're going to show you a similar setup on an NVIDIA earnings day. Okay. And think about what could have happened. But the fact is, right here, the Qs close above that high. And for me, that is the one thing I personally, I had short the market here and was using this high as a stop. That for me that's it. In my mind, I knew that is the signal to, that's the signal for me to say, hey, I'm wrong. And, to me, it was shocking for it to recover this quickly. So another huge thing here. And for us, that forced us to be long. So we actually went 50% long that day. 30% of that was in indexes, by the way. I'll go through a lot of everything we purchased that day, actually. So 30% was just indexes. So we did the Russell, the S&P, and the Qs. And then we had a few different stocks that we tried, which were prior leaders and some of these biotechs that were holding up. But anyways, that was a signal to get long. We followed through again one more day. We had some supportive action here where we were a little weak at the open, had a good close. The moving averages were about to cross over again, right? So the 10-day was going to get back above the 21-day, it looked like, in another day. And so with that, we actually went roughly 90% long. I think we were 80% effective, like on a cash basis, but we had a couple of levered ETFs to bring us to roughly 90% long on that day, December 1st. And I'll also go through other things we bought that day as well. So with that, we followed through, and this takes us all the way to today, where we've had some turning, we've added a couple things since then, we've pressed some positions, we've cut a couple of positions as well that didn't act well. But this takes us to that. This takes us to today, where we are. Look, if we're going to continue, we don't know, right? If the Fed somehow rug pulls us, or if it's already priced in, and we gap up and reverse because of the Fed's comments on the over next year or something. I don't know. Who knows? But the point is, we exited, we got back in quickly, and now this is where we are, and we're positioned for we're positioned. Here we are. We're almost 100% long as of today, and we will see how the market reacts tomorrow. With equally important, Thursday, the day after they make their announcements. So with that too, I wanted to zoom out and make that point I mentioned earlier. And you just high level, you can kind of see, okay, we sold a lot here. Here's the Nvidia earnings. Then we got long here and got longer here. So within just a couple of days, we went from 0 to 90% long. We do want to be flexible. We're for our clients, we're small enough to be able to do that. But these are it's still a lot of money to deploy in just a couple of days. But we want to avoid as much as we can of this, right? And get back in gear with the market quickly if that's what it's telling us to do. So that's what we did. And you see this, here's the ugly reversal day of Nvidia. Wow. This is what got me, very concerned, right? Very concerned. Like, oh my God, is it a bubble? Is the top in? Can it get any better for them, right? Because if it can't get any better, then maybe the top is in for them. Can the market work without them working? I don't know. Maybe. But the point is, this is a similar day here. Nvidia earnings back here, February 26th, I believe. And you had the same action. You gapped up and reversed, and it was a nasty, nasty day. And actually, for us, I think we had sold, 80% here, and then had like 20% left, and we sold it on the open of that Nvidia day, and went to cash right there. So just interesting, the parallels when you see, the most important stock in the world have this kind of ugly day. You don't know if you're going to get that, right? You don't know exactly. Most of the time you're not, right? Most of these time you're not getting bear markets. You're just getting corrections. But you just never know. And so for us, we bent, and here we are. We're back in step. So this easily could have changed too, right? If Trump changed his tone immediately, well, we could have easily just had a normal correction, but he didn't. And this ended up being a bear market. With that, to me, being like, wow, that being the accelerated start of that decline was that Nvidia earnings day. So, again, interesting not to see it get any worse. It really just stopped right there. So I don't know. Maybe that tells you about the strength of the market, but we seem to have avoided that decline. And so, for a couple more slides, here's a look at our buys. This is what we bought on that November 26th day. Since then, let's see, we got rid of INCY and ONC. Biotech, that was the thing, right? If you were to look here, mid-November, of course, you see, INCY, ONC, ARGX, a couple others, XBI, the index. Clearly, they were showing relative strength in November. And, that for us is an important thing. So that's where we, tried a small positions. I think we put 2.5% positions in on those three, and maybe 5% in XBI. But like WGS and MDGL are a couple others that were on our list, but maybe too small for us to purchase. But that's one thing we looked at. We looked at those biotechs because they were They were standing out like a sore thumb there. And then we went to the prior leaders, that we think have superior fundamentals. Even though we are buying below the 50-day, out of these corrections, we've seen this happen, and um, the fundamentals didn't change for these businesses, so we're looking for them to maybe stage a comeback and trying to get in early, before they change, because we think the market is bottoming. So Hood, and Palantir and Tesla, being those three. DY, having a really strong chart too, and good reaction to earnings in November. That's what drew us into those four names as well. And then December 1st, so just a couple trading days later, here are some other things we added. So we pressed a few things. We bought Bloom Energy. That was a new one that we added. We added this Lilly, which um, is trying to hang on, but healthcare was another one that that relative strength that was standing out. And then we pressed our indexes here as well, just to get more exposure. We added effectively 20% in index exposure on this day, along with pressing and adding a couple things. So um, this has been our sort of playbook. And that really, that wraps it up for like our playbook, and how we've navigated. I hope that was helpful. And the reason why we get out and in, of course, is to avoid those drawdowns as best we can. And the reality of it is, let's see, I'll pull this back. Right, it looks like the Qs, we're getting out, gosh, 2% within the highs or something here on the Qs, but you know we've got to get out, because this 8% correction, or 9, whatever, 10% correction in the Qs, whatever it was, that FFTY was down 22%, right, in the same time period. So we can't handle. We're not gonna let that happen, right? We can't be down 22%. And there's a chance that depending on what you own in that FFTY, you could be down 25-30%. And if you're trading your own account aggressively and you're on margin, you're down 35-40%, right? So just keep that in mind. Like, I do think we did a pretty good job, navigating through these corrections. These corrections happen all the time, and you're going to have a couple of these a year. But this is why we exit, because to avoid that kind of carnage and keep your mind okay, and everything. And that was it was nice to be out when when shit was hitting the fan a little bit. So let's see. I'll talk a little bit more, a few more. I have 3 more slides just to go through here. Just because the meeting's tomorrow. Okay. We always talk about that. Fed, the probability of a cut is now 90%. So it's priced in, right? Largely, it's not 100. So there could be upside to the market with the assurance that they're cutting. Who really knows? But the commentary, I guess, then becomes more about what they're doing. January, February, March, April, whatever, next year, right? Next year is more important. The question also then becomes, do we care what Powell says, because he's a lame duck, essentially, now. So I'm not sure if it's worth hanging on every word that he says. I think basically if he's dovish, then it's almost like, if he's dovish, it's great, for the market, probably. If he's hawkish, there's a good chance the market just discounts what he says entirely. So I mean, I don't want to say, like, I don't want to act like I'm just there's only bullish scenarios, but it's hard to imagine the market reacting so negatively to a hawkish cut. How do you react hawkish, or do a hawkish cut, if Powell's words don't matter as much? So anyways, we'll have to see how the market reacts. That's all we care. How is it going to react? We're positioned a certain way. We're almost all in. So we will see if we get this we'll see if we get the move up tomorrow. Um, this is something that we've talked about, and this is why we don't want to stay bearish either, right? Like knowing to be flexible. The market looked horrible around Thanksgiving and has come back. This often is just the most important thing that this is often just the only thing that matters, right? What's the Fed doing? Is the Fed easing? Yes. Is the market cooking? Yes. Still, or is the economy still humming? It appears to be so. There's been no whiff of a slowdown in AI or the investments there. Um, certainly when there is a whiff of that, we're going to have to be worried. We're going to have, I'm sure, it's got potential to have one of those. It's got potential to have a very large boom and bust cycle. So constantly we're thinking about that. But here's what it looks like. Here, the red line is what it looks like when we get interest rate cuts and the economy is doing just fine. So we have to remember that. That's the most important variable in the world, the Fed. This is something Roy shared with me. We've showed the actual Zweig thrusts in the past, and you can look up what the Zweig breadth thrust is, but it's really just when it's something like when gainers to losers goes to a ratio of 2 to 1 very quickly. So it's a really, really quick recovery. And we got a really, like we showed, really quick recovery from a really, really nasty correction in the Qs. So, and stocks in general. So we got this almost breadth thrust, and someone I guess put this data together. This is not my data. This is gosh, it's Subu Trade. Okay, probably must on Twitter. So I just want to give them credit for taking a look at this. But you can take a look at the history of these, and it generally does lead to a better market even going forward. So this is the breadth is important, and it's key to us, and we like to see participation out of the ashes, having an explosion of participation. We view that positively. And that again, that's our position. So with that, I mean, I'm gonna sort of in the prepared remarks of that part of the presentation, which I hope you guys found that helpful. I mean, I like to do that. I know Roy and I like to do that sort of as a post-mortem analysis. How do we do? Where can we do better? Where can we do better? And I think we did all right. I think the one place maybe we could do better, we could have done better, just in full transparency. And one of the hardest things I think for traders to do is to take the profits offensively. Roy and I wrestle with that a lot, right? Taking the offensive profits because you're leaving some out there, right? You're supposed to let your winners run. But it seems to us that in practice over the last 3-4 years, you don't really get to have doubles and triples in stocks without 20 to 30% corrections along the way, and so we've just tended to stay in that 3-month window with our trading. And that sort of helped us, but that's the hard part. The hard part is certainly taking profits offensively because you don't want to choke off a trade, but that's maybe the one thing that we can all that's constantly going to be a problem or a point of improvement for me, I'm sure. So anyways, I hope that was helpful. And Roy, I'm going to let you take over
All right.
and talk, stocks. We'll talk about pull up Market Smith.
Okay, and let me just add just a couple of comments. The first is they're really golden nuggets in terms of what Wes said. When the market peaks, it's normally in just about every case, it's the individual leading stocks peak. And those leading stocks back then were things like IREN, NBIS, and some other important stocks at the particular time, APLD, some data center stocks. So the leading stocks peak first. And so you got to be keyed in on the leading stocks. The second thing, and again, is the momentum wanes. And that momentum is measured quite often using the MACD, PPO. But that's just a momentum indicator showing you that the momentum is waning, and you typically get a sell signal on the MACD indicator where the indicator line, the signal crosses the indicator line. So that's, in many cases, the market in individual stocks can go higher, even though you've got a sell signal on the MACD, but it's something to be aware of. And finally, the third part of the equation is the trend, because price prevails. Price is the most important thing. And again, we're in the business of trying to not guess what the market's doing, but interpret what the market's doing. So price prevails. Price dictates everything. Price, dictates your position size, and it dictates where your stops are. So those are the three things that are important. And then again, the third part is when the trend changes. And for us, we view, particularly when the short-term trend has been, it's been in an uptrend for an extended period of time. When you have that 10-day exponential moving average cross below the 21-day moving average, that is a trend signal for us that the trend is now negative. So you want to, at that particular time, you want to make sure that you've got you're in a maximum defensive position, but you want to be flexible enough so that you, if the market changes, you can change with it. So those are three important basic tenets that we utilize in our toolbox that everyone, every short-term and long-term investors can utilize to enhance their performance by managing the risk. Again, the managing the risk is the most important concept in terms of growing your money from point A to point B and staying on the right side of the market without getting kicked out. But you've got to have an exit strategy. And Wes showed you that NVIDIA example, which is very interesting, because you can see what happened in April of 2025. And you can see what happened a few days ago. And you never know where the market is going to go, where the market's going to bottom, where the tops are. You just have to, you've got to use all this anecdotal information and assemble a strategy that works for you. This is what we've been practicing, what I've been practicing for 4 decades. Since I met Bill O'Neill in 1988 at a seminar, and again, it's kept me in the game. It's kept me out of trouble, and it's kept me from the boom and bust cycles that most traders go through. So it's great on the upside, but when the downs, but when you're buying the growth stocks, those stocks that really, that Wes said, can change your life, those stocks are much more volatile and the average true range of those are 2 and 3 and 4 times just your normal, very conservative stock. So that's the if I want to say, that's the, not necessarily the drawback, but that's the trade-off of achieving, very substantial returns in the market. If you're going to attempt to achieve very substantial returns, you're going to have to manage the risk side and the drawdowns much more importantly than if you just had a very boring portfolio where you're trying to make 5% or 5 to 8% and just mirror what the S&P 500 is doing. So that's the trade-off. And we know that the trade-off is well worth it because it's allowed us to change our lives and help us change our clients' lives over, many market cycles. So, that's a methodology that Bill Neal has taught, many people across the world, and many people have achieved, great success utilizing it, but notwithstanding the fact that you're always going to have, corrections, you're always going to have digestions, and that's why, of course, you've got to manage the downside. So Wes, thanks for that. Oh, the last thing is this wide thrust indicator has been very, very positive, and we've tracked that, certainly over the last 5 years in these meetup groups, and when the moment, and basically the signal it's flashing because there's exceptional momentum on the upside with a number of stocks that are advancing versus those that are declining, as Wes said, in a brief 10-day period of time. And those signals are extremely rare, and they're extremely productive. And things like, technical indicators like the McClellan oscillator, or when those signals fire, they're going to be very, very, the market's going to be on a technical basis very, very extended. And we call that, based on the McClellan oscillator statistics, overbought. And so what happens is when you get a rip snoring bull market, which we have not been in at all during this whole year, although we've been in a nascent uptrend, it hasn't been a rip snoring bull market. If you take out the Mag 7 stocks, and of course it's really down to the Mag 2, which basically are Google and maybe Google, Apple, or the primary leaders, in that, as a number of these big cap growth stocks have sold off, like Microsoft and Meta. So it's been very, very narrow in terms of what constitutes and what's the breakdown in the returns, in the S&P. It's been primarily because of the Mag 7. You take those out, and the market's probably up. The S&P is probably up only 2%, 2 to 3% or so. So it's an exciting time. It's a very challenging time in the market, as innovation is just permeating, and it's going to continue to permeate our economy and the stock market. It's this AI revolution is going to be dramatic, but there are going to be many winners and losers over the course of the next 10 to 15 years, just like the internet exploded, over the last 15 years. But you're going to have bear markets, but and there are going to be winners and losers. A lot of the winners at first aren't going to necessarily be there at the end. So you've got to be careful, and the technicals will show you those leading stocks, and we aim to help you identify them as we identify them for our clients as well. So just wanted to make a couple of comments just regarding the market direction and some of the things that we're looking at. And with that, Wes, let's pull up Market Surge and pull up, if you will, our portfolio first, and we'll show the viewers our positions. And the reason that we do this, it's for full transparency. First of all these names will expressed. We'll express when we bought these stocks on our Twitter feed. So I know many of you follow us on Twitter, and we try to provide that on a real time basis. And we're very, very good in terms of disclosing new positions. We don't disclose when we're selling these positions because it just gets too difficult because we're not on Twitter to really really establish uh, and talk about the stocks. We don't have time to do that, but we use that vehicle as a means to communicate, our thoughts and what actually we're doing. So we think that's very useful. Uh, so these are our positions currently. And Wes, you need to add
Mhm.
rubric to that list right there,
That's
which
right
we
there. Yeah.
actually, oh, you did, okay, which we
Yep. Yep.
bought today on the breakout. And if you put those in alphabetical order as well, we'll
Sure.
just go through these briefly, uh, and pull that down, if you will,
Yeah.
and pull it down so that we can see the earnings numbers. That's perfect. Okay, so these are our positions currently. Uh, we've got a position here in Amazon. You can see technically it's above the moving averages. You've got and you've got uh, that large cap feel. Which is of course, obviously, it's a dominant company. It's pulled back to the 50-day moving average. It's got great leadership, of course, and we bought this stock as it came back over the 50-day, right there where Wes has where he's indicated. So stocks that made the reason that we bought the stock is it reacted great to the earnings. You had an explosion in volume. You can see the stock traded during that day. That's 90 million shares, Wes?
Oh, let me 100.
Uh,
Yeah. Is that what that is?
rough. But anyway, it had a big explosion in volume.
Yeah.
The stock did come in as the market came in. You can see that's really a reflection of that FFTY as well in terms of growth stocks. That's the correction that took
Yeah.
place. Now, you may everyone, and we ask ourselves all the time as well. Well, why didn't you buy it at 215 when the stock was down there at 215? That's because it looked like the averages were going to come unglued right at that particular time.
Yeah.
And we have found that it's best to wait until the stock shows strength before you enter back in. It has to, quote, prove itself. And so that's why we bought the stock 4 days off the bottom, back above the 50-day, and that's a position that we've got a 5% position there. The next stock, and we'll look at a few of these biotech stocks. You can see this is a biotech stock that is profitable, and of course, no one in the retail sector really knows who Argenx is. No one's heard of them, except really money managers and portfolio managers that screen for these types of leadership characteristics. But you can see the stock made a new high in price. The pullback has been quite steady. It's been calm as it's come down here to the 21-day moving average. What you would like to see is you'd like to see this stock rebound right here off the 21 moving average tomorrow, in fact. And it's going to be interesting to see if we might have a little rotation tomorrow or a lot of rotation, because these you've had a lot of the biotech stocks that are coming in now, and we could get a rotation tomorrow back into them. So that's going to be important. But what attracted us to the stock are the earnings, the triple digit numbers down there, 273% in earnings, 664% in earnings, 800%. These are off the charts, guys, in terms of earnings. And remember, stock price appreciation there's a 100% correlation between the stop price and its growth and this earnings growth. So this is one that we want to see this stock, turn here, quickly, but powerful, it's got powerful fundamentals. The next is Dycom. Dycom is really in the built out and the update in the telecommunications area. And notice where the stock broke out on big volume to a new high. And again, that happens to be an all-time high in price. So that makes it even more attractive to us. And you can see the stock had a good earnings report. You can see the volume spike down there at the bottom. And the stock has had this earnings drift moving higher. And the stock has been so strong that it's only coming into the 10-day. If the market, if a market pullback persists from here, there's nothing wrong with the stock. If it goes to it can certainly go to the 21-day and find support. But if the market holds in here tomorrow, it might be one of the first out of the box. So keep that in mind, as you monitor and observe and watch this particular stock. But the relative strength is strong. Earnings per share rank very top shelf, and it's a great price. Wes, what does this look like on the monthly? See, there's your breakout. See this, it's in all-time high territory, leading stock, and no overhead. And this stock looks fantastic. Next. Eli Lilly, and we're battling with this one. This stock needs to turn. You can see that it's a drop for like 10 straight days here, right through the 21-day. We'll probably sell this stock tomorrow if it doesn't reverse.
I was going to say we may have already sold it. I was thinking.
Oh, did we? Did we get kicked out of it?
Yeah, then we had to stop in it.
Okay, we had to stop in at yesterday's low, so we got kicked out of this position.
1, 2, 3, 4, 5, 6, 7, 8. And that's it's 10 down days in a row. And this is that thing where just like biotechs, healthcare was standing out, such a standout, right? For during the correction, which maybe maybe it should be, and if everyone's defensive or whatever, but. We tried buying it on the pullback, but it hasn't. Gosh, it never turned. I mean, that's such a strange. That's got to be that's such a negative sequence. You would think to have 10 straight down days.
And we normally when the stock goes 2 days, a 2-day close below the 21-day, when these stocks go into this uptrend, and you can see you had those ants, which. Those are ants where the stock was so powerful that it went up 9 out of 11 days, I think, 13 out of 15, something like that.
Mm-hmm.
And and this is a indicator that market surge again annotates on charts that meet that criteria. And what we've noticed is once you have those ants, that a lot of times you do get, because the stock is very extended, it can come back to the 21-day. But a 2-day close below the 21-day for us is non-inspiring and a yellow flag. So we were giving this stock to yesterday's low, and we got kicked out of it today. We got stopped out of it today.
Yeah.
But your downside, you can see that 50-day, the red line. And that's why you have to maintain an exit strategy, because the 50-day is how much more down there, Wes?
It was 6.5%.
Okay, 6.5%. So I think we took an 8% loss on it on a 5% position, if I'm not mistaken, about like that. And we don't want to, we didn't want to ride it to the 50-day. Another, when you go back to the weekly, also you can look at the 10-week as support. So pull up the weekly, and there's really support. When you look at this stock on the weekly, really it looks fantastic. But where's the weekly? Where's the 10-week on it? That is 940. So you have to. Where was it, Wes?
It was 4.5% lower.
Okay, and think about it point wise. So, are you willing to let the stock go down another 42 points? That's not if it's going to hit the 10-week, we may buy the stock back at the 10-week right there. So we'll be watching the 50-day. We'll be watching the 10-day, the 10-week. We'll also be watching for a key reversal day. So with the key reversal day, if it can reverse, pull that up on the daily, Wes. Mm-hmm. It's certainly got the large cap growth universe covered. I mean, the numbers were impeccable. You can see that powerful earnings news, report at $7 in earnings, 495%. That is just mind blowing. But much of that has to do with the GLP-1 drugs and tirzepatide and their what's that?
Is it Zepbound and Mounjaro, right? Is that what you
mean? Mounjaro, and I think it's Zepbound or okay, but it definitely Mounjaro. Anyway, great big cap stock that has great numbers, but you had a couple of companies that came in there, and you're going to continue to have companies with competing, quote, GLP-1 drugs. So maybe that's pressuring the stock. But, back here, if it reclaims if it reclaims that 21-day again, we'll get interested in it again.
Mm-hmm.
Okay. Yep. Did you have a comment, Wes?
No, I was just going to pull up, we have these placeholders we can talk about.
Okay.
The Qs, right? We are in the Qs. And the Russell and the S&P, so for us, a lot of times, like here, Roy, you have that buy notated. For us, it's just getting exposure, right? Because that's a lot of it. If we can get, if we can have 50% involved in the indexes, okay, at least, the market's up 10%, we'll be up 5%, right? With that. And then trying to layer these other picks in to, get to generate the alpha, right? So, we've got that here with these indexes, and I'll go here to next stock for you, Roy, too. We can
okay. And on those indexes, if you'll take a look at the indexes on the weekly, let's take a brief look, just a quick cursory view on the weekly and on the monthly. See, there's the weekly view. You really there's nothing wrong here unless it takes out that weekly about 3 weeks ago, that low. If if it fails and takes that out right there on the weekly, there's going to be a more significant downside, and you'll right there will be you'll be blowing through all the averages on the downside. You'll be going probably to the 200-day, which is the 40-week on this chart. That's the magenta line down there at the bottom. And that's what you got to protect yourself for. So we're always 1 foot in, 1 foot out, watching everything. and not, and we pay great attention to not let our guard down, because if you let your guard down, the next thing that you know is you'll be underwater and hoping that your positions will come back, and that's uh, obviously not a great position to be in, and your confidence can definitely wane if you buy and hold and you don't have an exit strategy and they just come unglued and so forth. So the Qs look great there. What's the monthly look like, Wes? And see, nothing wrong there monthly. You look at these charts on the monthly basis, and everything looks great over the last 15, 20 years. It's just, when you have these red monthly declines, they look like nothing on the chart, but they are something when you go to the dailies and break it down further. Trend is still obviously positive. We're in a long-term secular uptrend.
Yeah.
And the IWM, and this IWM, there has been talk that that small companies will benefit the most when as the Fed continues to cut interest rates, because small businesses, their cost of capital is lower. And so, the cost of capital is lower. That goes straight to their bottom line. And we've been in a sideways market, in the small cap universe for years. Pull up the monthly, Wes. And so look at that. So you got this is a 5-year, we're almost breaking out of a 5-year base. And that is significant. So, Wes and I are talking about, potential leadership changes, in the next year. And it's, we try to take a thematic view of why things are happening, and, who are the leading stocks that are fueling those themes and so forth. But we really don't know who's going to benefit in the small cap sector yet, but they will show up. They'll go on that. They'll go to that FFTY list. They'll pop on that list. There'll be companies that have accelerating revenues and accelerating numbers. They'll just be smaller stocks. So, we might rotate. There's two ways that you can look at it. The large cap stocks, which have great cash flows in the Mag 7, they can continue to lead because of their pristine balance sheets and cash flows that they provide. But if we rotate out of those, we might rotate to the MDY, the mid cap and small cap area, which you can see they haven't done anything in 5 or 6 years. So we're definitely very, very aware of that potential flip, in terms of the factors that are going into these indexes. And the S&P West, the last one, you can pull up the SPY. And there's the SPY. So, because the trend, we're in an uptrend, the 10 days above the 21 day, the 21 days above the 50. And actually, tomorrow might be the all clear for sort of another power trend, which is which again, that's just a study that Mike Webster and Justin Nielsen and Charles Harris did for Investors Business Daily, just to sort of let you know if you should put the gas on the pedal or take it off. And with a good move tomorrow, it's going to be interesting to see. We could be off to the races, or we could come in and we could have this shakeout to the 50-day, uh, which is the red line on the chart. And if we happen to come in, my thought is the way that Nvidia break shook off, and if we just have a little scare tomorrow, I think that might be the last shakeout before really the year-end rally ensues. So it's going, or we can, or the market can just totally take off and you get into new highs and you're off to the races. So uh, we're not planning on panicking if the market comes in tomorrow. Again, when the trend changes, we'll change, but we are in an uptrend, right now. So we're going with the weight of the evidence.
Mm-hmm. Right. Oh, I'll go. Sorry, back up to now to stocks.
There's, yeah. Wes, why don't you speak of Palantir to give me a
Well,
little?
I mean, yeah, I'll talk about it again, obviously. I'm just checking. Is there a particular reason you do not choose any AI stocks other than Palantir? Well, I think Palantir is the leader still. And it likely continues to be in AI. I mean, the fundamentals are still there. They're accelerating revenue growth. This 63% number is probably going to be 70% or more next quarter. They just continue to execute. So I think we were ready to buy back some of these old leaders fast, especially the ones that have numbers, right? We talked about it a lot last month too. Why the leading sectors were stocks that were just so low quality. So to us, it's like there seemed to be a bifurcated market. I think last month was interesting too to talk about the market at our meetup. Where you had the quantum here that is nothing, and they're science experiments, and you've got the small modular reactors and some of the things in space that are just all these things are like pre-revenue. All these leading sectors, while they're just pre-revenue. So many of them, which is nuts. So we didn't touch them. But this to me is the blue chip. It's the blue chip leader, has the fundamentals. I love that Michael Burry's got a short on it. That's great. It's more ammo, more reason to get bearish. The argument every time it corrects, there's just a public freak out of valuation, because that's the only argument you can make, against them. It's valuation. It's not the product. It's not the execution. It's not the growth. It's valuation. So we can debate it forever, I guess, and we probably will. So, I'm thinking about. I was trying to think about down there at the 200-day. For me, 100 times earnings is a screaming buy for this thing. And especially if you think the numbers are wrong, right? If 2026 next year is closer to like $1.40, then I can understand why there's support there, the 200-day like it had. So anyways, we got back in it because Roy and I talked a lot about this too. We're not buying conventionally a lot of these things because over and over again we've seen the stocks come out of these corrections, and we do want to buy things a little bit early. And you don't have to buy things necessarily, especially when you haven't given these stocks the time to set up proper 6-month bases or 12-month bases. You can't buy these things. You can't wait for them to go to all-time highs. So we tried to get in quickly and sort of cheat below the 50-day. And we tried. In the way we did that was we were selective with a number of these. Or just very few high quality names that we thought could help us, that could lead us out of the correction. So, I continue to think this one's great. And not, the thing that worries me about Nvidia doesn't worry me about Palantir. It's a it's software is such a better business than what NVIDIA is selling. You would think it's going to be incredibly ingrained in their customers. Their top 10 customers are just going to be so reliant on them, and they're going to their customers are going to dominate. Their customers are sharing what they're doing with other competitors, and um, it's just you're going to be differentiated, and you're going to get left behind if you're not using this platform. I'm pretty sure, and it's going to be so sticky, unbelievably sticky because they're actually making a difference. So what? Anyways, I continue to be fired up on it. It was a good sell here. We talked about this last month too. This is the reaction to earnings. Doesn't matter what you think or the facts, right, of great numbers and all that. We saw it. Alex Karp, we talked about his quote, probably the best software results we've ever seen from any company ever, period. And, the stock's down 8%. So we sold it there and, avoided a further drawdown and bought it back. So that's where we are. It's setting up above the 50. Love this. I think Roy and I want to. I mean, I know to some extent want to press things and consolidate and winners. We've got 7.5% of our portfolio in it, and if we get moving tomorrow, if we do, to the upside, I think I'm prepared to. We're prepared to add a little bit more. Um, add a little bit more. And they did have a decent announcement, I think, overnight or post the close. They had some Navy contract that they've added. So not only is the government business booming, or the commercial, we know the U.S. commercial is growing like crazy. The government business is accelerating as well. And anyway, I don't see how this isn't just the next behemoth of a software company. I see Doug, you're saying 189, 192 now. It's weird. I don't have the number here. It's not updating. So,
Oh, really?
yeah, I guess maybe they're reacting to that Navy contract. It's several hundred million that they just signed for the Navy, I believe. So hey, that's good news. Anyways, still a favorite. Nvidia is going to have cycles, and Palantir might have cycles, but Palantir is going to consistently compound and grow their tentacles into everyone's businesses and become completely uh, indisposable, right? Indispensable. Nvidia always has competitors. I mean, AMD is at their heels. Chinese companies are probably going to be on their heels all the time. ASICs, right? TPUs. I'd rather not have to deal with that all the time, especially because those TPUs apparently are a big deal, right? We call Google is selling those now, and um, or looking to sell them, and they train their Gemini model, all that stuff. Anyways, I continue to love it. I'm glad we cheated on it and got in a little bit early. I guess probably down here a couple, this day, and then pressed it here, and then I think I took it to 7.5% above the 50 right there. And now I'm looking for maybe tomorrow with the news, maybe that's a catalyst, and we'll probably average into it. If we do, we'll just add a little bit more because we always we want to move the needle, and we want to, so we have to have a good size in some of these higher conviction plays to do that. So I will move on, and we can go to the next one now.
And the next one, Wes, is Robin Hood. Of course, this remains really sort of our most convicted idea. You can see the double bottom based on the stock. You can also see the drop from that 150 area all the way down to 102,
Yeah.
which is a stomach churning
Yeah.
decline. And that's why for us, we'd rather exit and try to buy back cheaper when the
Right.
when the market's pulling in
Right.
and so forth.
And this is a powerful snapback. Day 4, it's taken out those highs like quickly. that's the NVIDIA reversal day, and it blasted through it. That's interesting. And the same idea. It's the same exact thing we did with Palantir, where we probably bought it that day, added to it, and then added to it above the 50, and even a little bit today. Um, so it's our biggest single stock right now.
And Vlad, the CEO, is really a stem winder. He's really he's obsessed, focused, and we really think this is the way Charles Schwab was in 1998, which was one of my big winners in 1998, 27 years ago. We think it's the up and coming financial firm that's going to be in all these areas that Schwab aren't in. They're too big and too slow to react, and they're dominating the space. And the numbers are just out. The numbers here are outstanding. When you take a look at the technical picture, pull up the weekly and monthly, Wes, so we can take a look there. And there's the weekly. And also the monthly is important too. Let's take a look at the monthly.
Yep. Oh.
And there's the green line breakout that Dr. Eric Wishes coined, that we think is very, very useful, just using that phrase. And that's when a stock goes into an all-time high territory after normally after a 2-month. Once it goes into an all-time high territory, it can have a 2-month consolidation, and then if it makes a new high in the 3rd month, it constitutes another breakout. There's the breakout right there on it for the first time in all-time high territory, and we can show you example after example where when these stocks come back and make all-time high territory. And all-time high territory, they can double or triple from there on a technical basis. So we think this stock, potentially from a technical measuring basis can go to this stock can go to 300 over the next year.
I think it certainly can. It's such an easy story to understand. And first, I kind of think Palantir and Hood, they both can be $1 trillion. They can be $1 trillion companies just with the product roadmap they have, and that upside. Then that's why Hood's bigger for us, I think, because we're talking about going from 120 billion to $1 trillion. That upside. Not that we're going to hold it for a 10x. That's probably that could be 5-10 years down the line. But I think the fact that it seems achievable is like important, just to put it, to have that position on. Like you need to own things like that can conceivably do that. And of course, the upside's greater on Robinhood coming from 120 billion versus, Palantir coming from 400 or whatever, 400 or 500 or something now. So,
okay. And moving forward, the next stock, I think it's a Rubrik.
Yep.
And Rubrik, this is a stock that reported earnings 2 days ago. We just initiated the position today. We use a TWAP, and a TWAP, that is the trade weighted average price.
Time weighted.
Time weighted average price, where you can put in an order, and you can average in over the course of the whole day. And the algorithm allows us to do that. And so, when the stock actually took out the high of the earnings goal, we could have, many times, we just buy right there, but we decided to average in. And this was a really, really good follow through after the breakout on its earnings report. This is a security company that what makes this security company a little bit different from Palo Alto Networks and Zscaler and Fortinet and so forth is apparently Rubrik's product works well in using AI for all the large language models, and allows them to communicate better. And so NVIDIA is a prime partner of these guys. So we think that's what's got the stock sort of moving. And it's a smaller company. It's a smaller company, but the reaction to the earnings news was very positive. So we took I think a 2.5% position in this, which we would like to go. We'll have a 5% position if it trades at 100, if it takes out that 99.75 pivot. So we initiated a position, and we're looking at getting stronger based on how the stock reacts over subsequent days.
Right. And the key, I think the key thing, one of them here is that profitability. I mean, it's
Yeah.
such a big deal. That's probably, it's a lot of why it was up. Why it was up 20% on earnings, because they actually turned a profitable quarter, and that is such an important, I think, milestone in a company's trajectory, because you never know, right? So a lot of these, like you see these companies just generate losses for years and years and years after they go public, and they can't. For one, they're not candidates to be in indexes unless they're gap profitable, right? They can't get the S&P 500 unless they're gap profitable for 4 years. So that's like nice, and it's just not guaranteed. Like anyone can create a loss generating business. And so, if something tips in their favor, or they hit scale that they need, and I think it's awesome. So that has to be important now, where people can actually look at it. We're always hesitant, right, Ron? We're always hesitant to invest in companies that have negative earnings. I know, so we're not the only.
Wes,
I don't know. We're not. Well, and one other reason we talk about that too. Why, when you've got these losing businesses, they're all just itching to dilute. They're all itching to raise more capital, and then you get whacked with a convertible out of or which should be expected if you're generating losses. But that's helpful. You can fund the growth of the business with cash, and not keep diluting like you saw with every other all the space companies and the quantum and whatever, the SMRs and the Oklos. It's a big deal, I think, to have a profitable business now.
and Wes, point out the losing years over there on the table on the left.
Oh yeah, all these, right? Bam, 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 bam. 6 straight years of losses, and then you get one quarter. So,
Yep.
right here, and
Now,
that's what you get.
as an example, pull up CrowdStrike and notice CrowdStrike. Okay, well,
Can I
they were
see? Let's see back here. I mean,
yeah,
where did they go public? Right here? Is that yeah, public in
yeah,
2019? Though you can see,
yeah,
they were losing money, and
yep.
probably further back than that if you could, see their financials. I'm sure.
And
Um,
if you change the date, so they were losing money, they went to the first profitable, the first profitable year. West, back up to the monthly.
oh, I thought you wanted
And,
to change the date or something.
yeah, I do, but go to the monthly on
Okay,
it
that's fine. Yeah.
and change. That's actually, yeah, that's actually what I wanted to see. And so we had the green line breakout right there, and that's the example, sort of what we were using on
Yeah.
Hood.
Right.
Uh, and I think Ruby. So there's the breakout at 100. You can see once this stock dropped from 100 to 20 to 30 in the
Yeah.
bear market of 2020, and then when it made a new high at 100, then you had a move up from 100 to 300. You could see that move right there,
Mm-hmm.
and pull up. So that's what we're sort of the playbook that we're looking at for a number of these, pull up Hood again one more time,
Mm-hmm.
and change your date to today.
Right.
And then, see, there's the parallel. There's that's what we're looking at on
Yeah,
on some of these. So you might look at this and say, "Golly, the stock is up huge from the low." It is, but the
it
real
is.
move is just on in our view. For the next couple of years.
Yeah. Okay, so we have this one too. We didn't talk about yet, but this is that thing. This is that um, sector that pulled us in. It kind of sucked us in because of the RS, the relative strength during the last correction, and we picked a few individual stocks, but then we also added this. Probably, I think we added it on that day. Um, a little 5% position just to give us diversification because it's hard. We don't know the ins and outs of a lot of these biotechs, and we just saw the sector working and the relative strength there. So, and then we're in it here. It pulled back to the 10-day. Certainly nothing wrong with it. The only thing you have to contend with is rotation, and if it's just going to get hit or start working, right? It's really unclear. But we were in this highly rotational market for a few weeks, and we will see. Nothing wrong, but we have a 5% position in that sector.
And the last one is Tesla.
Yeah, that's right.
Wes, I'll let you handle this one,
Oh,
please.
sure. Yeah, I'll keep talking about it. It came in hit the 50, got support where you'd expect it to. There was a downgrade yesterday from Morgan Stanley, on on Tesla. At first, I was telling Roy, I thought I'm like, oh no, is that Adam Jonas? Changing his tune, but he's been the mega bull on this name for gosh, 10 years probably, and I didn't realize he left. He left Morgan Stanley recently, so their new analyst, initiated with the market perform rating on on the stock. Um, it's all about FSD right now and robotaxi. It's not about robots. I mean, robots are great, and there's optionality, and I hope they work and all that. But I just see them as they're the tech leader. They're the ones that are actually um, potentially working on the game changing technology out there right now, and FSD and robotaxi. We kind of see it as it's a little bit of a razor blade. I mean, it's an expensive razor blade model. You got to pay $45,000 to get a new car, but you just think about what if I think that the more and more people that try FSD, they're going to use it, and um, at $100 a month, I mean, it's got to be a good value. If you can look it up on YouTube, you can watch people go through those demonstrations, and there's people that have been following this technology for years and years and years, and uh, talk about every single update to the software, right? They're on version 14 point something right now, which was apparently a big step forward. Um, and I just want to see adoption pick up, and it's expensive on a PE basis, of course, and they've got to grow into some of this with FSD, I think, and robotaxi, and then robots are like a 5-year call option, but I don't think they're significant to the story right now. But the cars are robots on wheels, and gosh, they're look, if they're working, they're gonna if the stock's working, we'll stick with it, of course. I don't know what the next catalyst is for the numbers. Maybe it's robo taxis. Maybe they actually make maybe that is a good profit center for them. I'm not sure, but I'm most excited about FSD because they've already got the cars out there, and you just need to get people to sign up. And I think that's coming. I think more and more will sign up for that over the years. So that's imminent, right? That's happening now. That's what I like about that part of the story most. It's happening like this. In the next 12 months, you should see further adoption of FSD if they're doing it right, and if they're starting to sort of push it in the car. I was telling Roy, like, I'm sure that if you plug in a destination, it's going to say, "Hey, try FSD," or something of that nature to sort of push adoption a little bit more. But they're doing it so carefully. I think they're doing a great job, carefully rolling it out because you get one first impression. So you've got these bleeding edge adopters, these, Tesla fanatics that are, of course, adopting it. But, my mom, for instance, if she tries it one time and if she tries it one time and, it does some kind of embarrassing turn where, it doesn't act right, well, she may never have faith in that thing for another 2 years, right? So you've really got to have good confidence in it to start pushing it on people. Because you don't want to lose them as adopters for a long period of time.
What's the
And
stock look like on the
what?
monthly? Yeah.
Yeah, yeah, they've gone nowhere. Um, gosh, where is that? 2020? Oops, 2021. So this looks like small caps, like we showed, where it made a brief new high, pulled back, and now here we are again. I mean, that is a serious consolidation for a trillion-dollar company right here.
And look at the. I wanted to point out this is probably, looking back, this was the worst miss for me in my career. You can see we've got that green line breakout there at
Yeah,
the 2015 to 2017. And I was aware of this stock and I tried it like one time, two times, like three times in like 2016 when it consolidated and peaked there in 2016 to 2018. And so you can see where you had that last shakeout in it there in 2018. That was a bear market, 2018. And then when it came back and made a new high, which was technically a buy there, that 25 area, and I totally missed it, never participated, never got in. And I regret that because you can see the stock went from 25 to 400. So we're not going to miss it this time. You can see it's a 5-year breakout. It's sitting here. If you go through all this resistance, and it's going to be the catalyst is going to be it's going to be the robo taxi rollout that
yeah,
where they're increasing the cities, or it's going to be a new product, it's going to be a new vehicle, it's going to be something new, but
right,
it's very, very close to having that breakout right there, that 475 to 485 area. I mean, it's right on the cusp. So, uh,
yep,
it's acting great despite it looks like it's getting red. The market's discounting, future
right.
fundamental positives.
And you can doubt Elon, of course, and he's always aggressive on the timelines historically and all that. But the fact is, he is the only one out there working on these completely, life-changing type of inventions that are all doable, especially with AI's improvements. So, we know it can do it, but we know the car can drive itself. And my thought also is that the real advantage isn't going to be in software eventually. It's going to be in the engineering capability. So you're going to see that kind of switch, like at some point where they're the experts in building stuff, right? Anyone's going to be able to replicate an LLM, right? There's 50 LLMs, out there, and um, anyone's going to be able to train cars eventually on real life data or synthetic data or whatever. But I mean, there's so much optionality. Like Roy said, new products. I've mentioned to him like licensing deals for the technology for like a Toyota or a Hyundai or a Ford even, right? Just because you don't want to keep investing in it, and they may be the standard that people ultimately just concede and put it in there, put their tech in. I don't know. There's a lot of options. So um,
Okay, Wes, pull up, if you will, our buy list just so the viewers can see. This is sort of what we're looking at right now, and just expand that so that they
yeah,
can do a screenshot. And so these happen to just be in alphabetical order. So Apple to IONS,
Yeah.
and this is sort of and this list changes obviously. We keep this updated. Stocks come on the list and off the list, but this is really what we're looking at right now. So you can take a screenshot of these names.
Yeah.
And if any one of you, if you got any questions regarding any of these names, or we'll open the floor to up to and take questions on any stocks you guys would like to look at right now.
Hmm. We some people have asked about this before. I mean, I honestly forget. Like XBI is got the smaller caps. Is that right, Roy? You know the
Yes.
details of these more.
Yeah, in the XBI, you're going to have about 130 to 140 names, and it's going to be a lot of these stocks that don't have earnings, or in some that don't even have revenues either. So it's a more speculative play, but so there's more upside, but you're diversified from, your risk is somewhat mitigated and diversified versus the IBB, which is going to be, that's going to contain more of your stocks like Amgen, Gilead, your larger Biogen, the larger cap biotech stocks.
Okay. Here's on Frog.
Frog looks great. And it hit our screen in the last few days. You can see I have a down trend line drawn there where it broke out 4 days ago. And, on the earnings, report. So it looks like a potential new leader. It's got, look at that relative strength line going into new high territory over there on the right,
Hmm.
right there. So that's show. Look at the wall of blue there. Look at the volume accumulation right there.
Yeah.
So this stock looks, this stock looks super. It's right on the cusp. It's a little bit too thin for us to buy right here. I mean, it's right on the cusp, and the stock took out that 85, 65.50 price,
Yeah.
and after the correction, and an early entry was, you can see we have that down trend line drawn there. And, that was an early entry, like, 4 or 5 days ago. And, the stock, technically looks great. So, definitely a potential new leader. A Broadcom looks fantastic. And this is really the leading semiconductor stock in the market. And of course, Broadcom is competing with NVIDIA, and they're also providing new what are the new chips, Wes? TPUs.
I'm muted. Sorry. The TPUs. Yeah, you're talking. That's we mentioned it for a second, right? The Google TPUs. They build the application specific integrated circuits. That's the lingo. And so, while they got hit with NVIDIA, just overall, I don't know, AI hardware sentiment, gosh, they, snap back immediately. And, later on, you kind of, I think within the next couple of days, you figured out it's all because they're building, they're a big part of the Google TPU strategy, which apparently is very good for them and for their model, Gemini. So,
So,
yeah, the
it's a
RS
lead,
does it
it's
all.
excuse me.
Well, you know,
It is the leading semiconductor stock, but
yeah,
earnings are in 2 days. So, if since it's at a new high territory,
yeah,
you've got a profit in it. So that's the risk, the earnings risk. But
yeah,
you know, we're expecting a great report, but we'll see.
Right. Okay. MU is
MU looks excellent too. Great earnings. This memory area is extremely uh, uh, robust right now, and the memory companies, are consist of SanDisk, uh, WDC, Seagate Technology, and Micron. Those are really the four big winners in the group, and you can see. I mean, but look at you. Really, what you want is you want that very, very tight action. You can see when these stocks had that tight action and broke out. We need a new trend to take place. We need these stocks to get into new high territory and just get into a nice steady uptrend. Because these stocks, you can see how volatile they were. 260 to 190 down, 70 points. That would have been murder. That's what happened with it was obviously in the FFTY, and that's what happened, and that's how much a number of these stocks dropped in that volatile pullback there when where the FFTY dropped 22%. So it's recaptured. It didn't even break the 50, very strong. Now it's come back up here to the old highs. And what would be ideal is for this stock to quote handle and just go get inside, go sideways for like a 5 to 7 day handle, and then take out today's high. And we would be a buyer of that stock then. We're not in it, and we didn't buy it at the 50. Obviously, the 50-day it had support. But now for us, looking for a potential cup and handle, we'd like to see it handle. And then, that's if it handles and then takes that high out, that's going to get the institutions all excited. And we would definitely buy this stock if it handles and then takes out a high. So great number. You can see the numbers here down below. Very, very pristine numbers. And you look at the annual return, the annual numbers over there, 25, 26, 27, off the charts. I mean, this is definitely one that we got to find a way to get back in and to get in. And again, we think the move, it's not over. This move is potentially just getting started. If we want to look at leading stocks over the next year, what's it look like on the monthly? See, look at that. That's essentially, that's a 25-year breakout, really. That's just taken place this year. So, stocks 100 to 200 with those numbers looking out, forward, clearly this stock has the potential to double and go to 500 to 1,000 over the next year or two, based on those earnings projections over there in the left data table. Definitely, this is definitely a potential big stock.
Yeah. And I pulled this question up because, of course, GEV after.
Okay.
We already touched on AVGO, but I'll touch on it. Roy and I are talking about how we're looking for things that have decent bases, right? Like that MU and WDC have really, really short bases. This has something a little bit longer, so we kind of like that. It's like 6 months long. They reported some, updates to numbers that, look good, of course, on the surface. And the stock's up after hours with it. So I know we're looking at it. We've traded it, and what we like about this one, of course, is it's a blue chip of energy. right? They build the turbines that power, that are going to power these data centers, and they're booked up for a few years and everything, and they're going to end up selling them to these data center to Meta and Microsoft and Amazon and everybody. Um, we want to see it hold. We'll see. It's so hard to guess, right? There's not a lot of liquidity after hours to know, but it's showing up 6%. They upped their long-term 2028 guidance numbers that they put out, and they're going to grow. It looks like quite a bit over the next few years. And so it's something we're going to be monitoring closely tomorrow, because we particularly like the breakouts to all-time highs. This one coming after 6 months. Institutional quality, they increased their dividend and their share buybacks too, and yeah, it's an important one to watch. While we can sit here and debate whether TPUs are as good as GPUs or whatever, we don't know, but the power, Roy and I were talking about how it's agnostic to everything. The power is agnostic to the models and to what the models are running on, and these guys seem to be really the only game in town for these turbines that make meaningful amounts of power, um, to power the data center. So, anyways, it's definitely a good one to flag today, especially with the move after hours.
Wes, point out, this is so this guys. This is a very wide and loose chart pattern right now. I mean, there's no way this has been investable, since the peak there at 677.29. There's absolutely no way that it could have been invested, that it was investable. But go back and look, Wes, point out the August September breakout in last year.
Oh,
Last year.
yeah,
So that is really what you want, guys. See where it broke out there at roughly 200.
yeah,
And then look how tight it got. It got really tight and traveled from 200 to 357. That is, and we got a double here out of it, or close to it. And that's the type of breakout and how tight the price is optimal, from a situation like that. So go back now and go back to the current date.
Yeah, because just a thought on that, because you're absolutely right. That's such a better breakout, and
Yeah.
we'll see that this is like that is similar. It's like a 6-month base, so we could see that. We could tomorrow.
And take a look at this, Wes. You look at that from 447 to 252. That right there looks very similar, and to where we are like right now. See right there. And then when you broke out, you got back above the 50-day there in April. Back in right there.
Back here, yeah.
That right there looks like that's where we are today.
Could be. Yep. Very well could be.
So, and then look how tight it got there in April to May, July. You had this great move from 400. You had a 50, 60% move between the earnings periods. Now, and again, GV pre-announced tonight at 4:15. And that's the first company that we've seen that has reported, that are reporting numbers for for the next reporting period. So that's very intriguing.
Yeah. Let's pull up LITE.
Oh man, congratulations, man. This is where we look at the breakout there at 180, and we just totally missed it. You can, the numbers are great. look at the numbers. They're fantastic. They were fantastic. And it's just too,
Yep.
it's just, this thing has been so strong. It just touched the 21 day, just touched the 21 day. And there's that breakout at 200 where, or the move at 200 where you had an opportunity to buy and we just totally missed it.
Yeah. And this is why, I mean, this is a good reason why GEV needs to be on our list, because if it does break out, this is all-time highs are the best, right? The best breakouts.
Yeah.
And we don't know if it's going to work or whatever, but anything making an all-time high on a catalyst of numbers, for example, too, might be starting a bigger move. So, that you don't need. Sometimes you can overthink it and think and worry about buying. Like if you're going to buy and you're going to get rug pulled on that same day, and you could, but I know when Roy and I talk about buying stuff like this, it helps to do this time weighted average price. It's helped, I think, with execution and emotions, because then you just say, okay, well, I know it's gapping to new all-time highs. Let me just average in the whole day and know you're not going to be, if you're buying it the whole day, you're not going to be down, 10%. You're not going to be stuck buying it at the high of the day. You're probably going to get a decent price when it's all said and done, and, not be underwater a whole bunch. Just something to think about. If you can, do that yourself, you can always buy a little bit, on actionable ideas like that. Buy a little bit every hour, to get into the stuff.
And this is the number one group, leading group. Incidentally, the shares outstanding. It's only 71 million shares outstanding. So you're going to see a split in this stock, and the split many times. Splits attract interest because the stock trades at a lower price, and so that might attract some interest. And also, when the split occurs, it's not going to look as extended when the split occurs. So that's just something, that I'm in my mind. My mental framework is I'm reminded that the picture, the visualization of what the stocks can look like once it splits. So it splits, undoubtedly, you'll see that coming. So it's just extended now, but it's in the number one group. Just like Corning, but there you got Corning, GLW, Sienna, and VIAV, and these these look fantastic. So this is it. This is in the optical space. So there's going to be a build out in the next transformation in the optical area, and the need for more there's called receivers, receivers, something like that. But they're vital in the build out in the data centers, and they're an important component that's utilized in the assembly of the data centers. So you can see that this squatted, and the numbers are good. They report in 2 days. So look at that breakout, right there on the last earnings report. See, that is what we're looking for. We're looking for, okay, who's going to pre-announce, who's going to have an earnings report, and that propels the stock to an all-time high territory. And that's what we're exploring. But Sienna, Sienna's got great numbers. Look at it. Take a look at it on the monthly, and this is what's this is, you can see this stock's at a 20-year breakout, on Sienna. And now go to GLW. And look at GLW. This is a 25-year. it's much closer to breaking out than Sienna is. Look at Corning. A 25-year breakout is a month. It's it is showing itself. You're right on the cusp. So this is, this is. I'm sure if we talk to John Rope from
Mhm.
uh,
22V.
yes, that this is going to be on his watch list as well. So close to breaking out in a 25-year base. And when these things break out after going sideways in a lot for a long period of time, then then it's they're the next leaders, but they're old fallen leaders that reassert themselves. Pull up Microsoft. You can see when Microsoft had a 25-year breakout. And see, there's the breakout in Microsoft from the 2000 top. And it was actually a 20-year breakout.
Mhm.
Uh, and
Yeah.
so there's where Microsoft broke out after going sideways for, roughly, 20 years.
Oh, here, we didn't. I don't think we even went over this one. Somehow I missed it in our list, or did we talk about it?
We did not, and it must not have been in the list. It should be.
I feel Yeah, maybe I could have missed it. But anyways, uh, I don't know. We
We
own
own
it.
we own it.
Yeah.
Yeah,
I can't remember if we actually bought it. Where did we buy it? Did we buy it? I think we were buying it here. A couple of days. Um, in here when it broke above the 50. Held on to it. Had a nasty day. No idea why. And then surged back through the 50 on this day just a few days ago. I don't see anything wrong with it here. We were talking about it today. It maybe it's doing what Tesla did today. It comes, or yesterday. It came into the 50. Nothing wrong with it right here. Interested in it. Um, Interested in trying to buy it right. Gosh, volume was really low today on this pullback here too, which is nice. Energy, right? It's more energy. Uh, Everything from what we understand, it just they can deploy this energy pretty quickly to the on-site power for these data centers. So it's more data center stuff, more energy for that. And I don't know. There's a lot of pros to it. There's a lot of pros to it apparently for deploying some of this stuff some of their technology at these new things. So we're in it because it's. I mean, this is the breakout we weren't in, right? For it, we had some other things in the data center area like NBIS and APLD, that had similar really strong runs. And anyways, we're in it and looking for a turn, but it's got a hold here. Clearly, we wanted to hold the 50, um, or else we're gonna have to kick it perhaps. But that's it. I mean,
and you may draw a trend line there to give you an early entry there, taking that out right there.
yeah,
So
sure,
taking that out, that trend line would be an interesting way. If you're not in it, you could buy it, taking out the trend line, and then press it at above 120 with two
right.
different entries. Average
Yeah,
up.
and yeah, I thought that that it was so strong on a down day on December 5th here, but just kind of it's not the most liquid stock. It's $25 billion. It's volatile. It certainly is. So it's going to cut both ways. But I mean, we're in it. Let's see. Here's another BRKB. Ooh, I don't have any thoughts on Berkshire really. Do you, Roy? I mean, what they bought
It's
Google. They thought they'd look
it's
better since they bought Google.
it's definitely lagging. It's definitely lagging. It's below all the averages. You can see it's been consolidating. It's got very poor relative strength at 48. The numbers aren't good. The numbers aren't great. Minus 3% this year, up only 2% next year. It's a uh, uh, massive company, and it's out of position right here. And of course, it depends on if you own it, if you bought it, but it's not viable from a trading perspective, really. Here you can see the wide. It doesn't exhibit the very tight price action that you'd want to see for a stock that's in a leading stock that's in an uptrend. So
Uh-huh.
it would be a void for us.
Whew. Yeah, I got Oracle. And I know we're not really bottom fish people, but man, this thing got absolutely crushed. $1 trillion company got cut in half in 2 months. And the things that, could be signaling the bottom is just the really, really widespread news about their credit default swaps, surging in price because of, all the debt that they're taking on to fund, um, the build out for OpenAI, right? We know they got the huge backlog for OpenAI, but that's going to come at a cost apparently to them, which is issuing debt to build these things um, for them. But this looks like it does look like bottoming action. Not that we're going to take a stance on it for earnings tomorrow, but two of these stocks that were extremely out of favor and look the kind of the same. You kind of see a shift in tone, which makes it, I think, probably sets you up more positively than negatively in Oracle, right? You've already got cut in half. I mean, what's the downside after that? After the backlog and after just a ton of negative press on the debt, and then CoreWeave, something interesting here is they announced a secondary um, here because it's all about like they're building this stuff and it takes funding. They announced a secondary and had a good close, and then they announced that it was an upsized offering, so it was oversubscribed, and they ended up 5% today. So, I think that might bode well too for just overall sentiment in that space for Oracle tomorrow. It's not our conventional setup, but the fact is, you could trade it. You could be in it based off this sort of downward trend line breaking in the turn above the 200 and all that. But with earnings tomorrow, I don't know how you touch it exactly. I mean, you can, anyone can gamble on it, but I can't imagine the worst not being already baked in. Um, yeah, I don't know. I'm going to be watching though, or listening at least tomorrow to see.
Wes, pull up Credo.
Okay. I can we can come back to this one if you want.
Okay, we'll come. Yeah, so this is interesting. This is what makes this stock so difficult. You can see where the stock made a new high and they sold right into it. And the numbers, these are by far the best numbers on the street of pretty much any stock that we've seen out there. So, but the reaction after it, broke out, what you would want to see, ideally you would want to see is that stock to hold at that 193.50 area,
Yeah.
and it did not. So it's a little bit perplexing. The numbers are great, but the action's not good. But so we'll see where that stock goes. And the risk in a stock, just from a technical perspective like this, is you might have like a Microsoft or a Kava on your hands. And Kava was a big winner for us a year ago. Pull up Kava and notice where that stock peaked. See, that's the potential. That's what Credo might be at that 172.43 area, like right there. And so, time will tell. We'll see what happens. But that was a perfect example of a leading stock in the restaurant space that
Mhm.
sold they gapped up 20 and they sold right into it, and that was the peak. So we'll see if that's will be the case for
Hmm.
Credo or not. Time will tell.
Yeah. Yeah. We'll flood this. Yeah. Yeah. Few more. Uh, I don't know anything about it, honestly, but and I don't, for us, it's not certainly not the technical setup for us.
Yeah, it's below all the averages. The numbers are actually looks like the numbers are very good the last 3 quarters. It's a small
Mm.
company, only $2 billion, $2 billion in market cap. This is coming out of a correction. I mean, the numbers look to be very, very good, very good, very solid. Numbers next year good. It's quote cheap. You had this nice move from 20 to 40. Uh, this is this is something to probably keep on our. We would keep it on our watch list. When the stock breaks back above the 50, it might be actionable right there, breaking back over the
Right.
50-day
Like you
right
said,
there. So,
though, it is small for
yeah,
us, and gosh, I think you want the things that are above the 50 already. Really, if you want the leaders, they're already above the 50.
yeah, yeah.
Um,
You know,
here's
we typically are buying stocks that are within 15% of their 52-week high. I mean, just 90% of the time.
yeah, yep. We don't own app. I don't know. I think see, this is the thing. This is the one this was above the 50 already. Bam.
Right there.
On December 1st. When that was a date when we were buying some things too. We did not buy app. We happen to trade app. I don't know, maybe from here to here, and locked in a decent profit. And there are some rumors, SEC things or whatever it was, or regulatory, and that's why it's been off of our radar. I mean, that's the whole reason why we weren't buying it, because we know that's what hit on this day, some kind of a regulatory investigation, right, where they're sharing data. And so it's been on a no-go zone for us for a while, but it fought back, and here it is. I don't think to me, it looks like it's kind of like those storage ones where we prefer it to handle, right? We don't want to just buy it up here, either. And I don't know. I'm still just like, why would I go for personally, I'm like, why would I try when they have this confusing overhang that I don't really understand?
Yeah.
Um,
It
and I think,
is a double bottom. It's a somewhat flawed double bottom base, but there you can see the double bottom where you got down to 547. You undercut there at 489, and again, that's really when you get a double bottom like that, there are a number of ways that you can re-enter a double bottom base. One way is when you get a 3-box reversal from 489, and that's on a point and figure chart. So, if you got and all these charts, like from stock charts to Finviz, you can you can you can change the chart from a point and figure chart to from a bar chart to a candlestick chart to a point and
mhm,
figure chart. So there really basically three tactics, three techniques when you get a double bottom base like this. The first is when you get a reversal in the point and figure chart. That's going to give you a different price entry point. The second is when you undercut like that. When you come back and you take out 547, that's another tactic. Right, buy right there at 547.
uh-huh, yeah,
And then the next the next tactic would be back over the 50-day to buy it there, and then finally taking out the midpoint at 675 of the W, that's the place to add as well. So, if you're sitting there and you happen, and this has not been on our screen, on our, we haven't watched it, but looking back, if you were following that stock the way that we're following, a number of these other stocks, those would be the 4 places where you would have added and averaged up, in the position.
Right.
I'll pull up Reddit. So that's, Reddit's sort of like app coming back from the grave. So, here you've got Reddit that's got, phenomenal numbers as well. So this is firming up here after being, a winner last year, big sell-offs. And, this is a controversial stock too, though, as well. But, it's firming up. The numbers are really good. And there's a lot of confusion as to whether or not large language model. There's a bunch of stuff going on with Google and the large language models as well.
Yeah, scraping. They're scraping their data, and so they're not getting the traffic in reality, and so there's no ad revenue if they're not getting the traffic, and it all feels a little bit questionable. Like, somewhat stealing data, to do that. I don't know, but charts changed, and I know we've made some okay money with it a couple of times, but then it's also a little bit choppy. And that's the other thing. It's kind of like gosh, when you've got that questionable overhang, like, do we need to do it? There's a lot of things that don't have that. I mean, I guess the bear case could be proven wrong, and that's what makes it go higher too. But those seem like big ones that are hard to figure out. Big questions that are hard to know.
Wes, pull up, if you will, like WGS and also WGS, which has a very interesting chart. Yeah, these 3. So, there are 3 of these biotech stocks that have a really excellent chart, but you can see that you can do some work with these. You can see the numbers. This is genetic testing stock that it's got triple-digit numbers. That's at a 52-week high in price. You can see the pullback. It broke out, and it's very thin. It's too thin for us to buy it, but you can see it's holding. Watch to see if this stock reverses. Like in upcoming days, this could be a nice winning stock. Pull up GH. This is in that genetic testing area as well. So you can see the breakout on earnings where the stock broke out there on earnings. That's the characteristic. That's the type of chart pattern that we like to see. It didn't take out the low of the breakout day, just like Rubric has not taken out the low, unlike Credo, which took out the low when the stock gapped up on the number. So, this is another one that's, you can see it's got a 97 relative strength. So watch this stock to see. It's not profitable, but there's definitely something going on here. And that, like the last one, was that MDGL. And, it's going to look at this going from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 negative years in earnings, and they're going to be profitable next year. So this is something, very, very unique. And so this is, you can see it just broke out. So if these, we're watching to see if we're looking for new leadership, and can these stocks be new leaders that can propel this market higher and double in price? That's what we're always looking for. So those are, those are interesting.
Yeah. There's like two more on here, and then we can wrap it up.
Okay.
Yeah, Bill, he's asking about Dave, um, which I haven't looked at in a little bit, but um, well, I mean the chart is it's choppy for us now. This is the run. I remember people talking about it during
Yeah.
the major run here in May out of the bear market. Had a great run, and you can see why, right? In retrospect, you're like, oh well, earnings went from $5 to $11 or $12 this year. Um, so really good run. I guess they're really just a cash management card at like a 7-Eleven, I think, something like that. Um, or where I don't know where you get it exactly, but I think they just I could be wrong on that, but one of those easy sort for the non-banked, right? Non-banked people. But and gosh, I used to cover a company in my sell side era it was called NetSpend, or they had a segment called NetSpend, which was really similar, and they would offer these cards and basically become like it was like a quasi bank account for the unbanked people, and it seemed like such a great idea, but it never really connected. I don't know. Um, I mean, there's so many. I don't understand why anyone would pick Dave over SoFi, but overall, really, it's just looking at now. This chart is so choppy, choppy, choppy. It's in that different stage. It looks like, right. This looks like you could say it's stage 3 or it's stage 1, and we have no idea it's going to break out again. But um, it doesn't look actionable to us. All right.
But the numbers are fantastic. So keep your we would keep our eyes peeled if there's if you get a key reversal back over the 50 on volume. But it's very, very wide and choppy here. But
Yeah, and maybe
you're
because you want to
always
see this, the
yeah.
numbers, or are they peaking? Well, maybe, and the stock will if they are, but I don't know anything about it.
Yep.
It would, and Roy, we looked at this a little bit because we were like, okay, what's going on with Lilly? Why is it down 10 days in a row,
Yep.
right? And this one is the one that I think jumped out. Yeah.
Yeah, and so this
So,
is it's definitely a blow off to the upside. Here went parabolic. It's can take this very poor action. They sold right into it up there. It was it's more than likely this stock will retrace a lot of this gain. And
um,
VKTX, yeah, go ahead.
yeah, VKT. Oh well, VKTX. All these. I don't know if it's legit if you can do oral like GLP-1
Yeah,
stuff yet, because they tried to, and I think for them, this is where somewhere around here is where they failed a trial of sorts for their competitor, their copycat with a pill. I think, but
and NVO had an oral that failed too, Wes.
yeah. So I'm not sure. This is the whole thing where admittedly, we don't really know what's going on at GPCR, if it's legitimate. We're we don't have that not that knowledge base, but and like you said, I wouldn't be I would not be interested in trying this one at all with the way it's faded like that. But uh,
And with
yeah,
that, let's go ahead, Wes, and wrap it up. Uh, Guys, again, we hope you took a look at our buy list. We have some really, really excellent ideas on that list that hopefully will give you some shortcuts in terms of just reducing just having an actionable list and reducing some work for yourself. We always love doing this, and we're thankful and grateful that you've tuned in tonight. And again, we hope to see you next week. And may you continue to prosper and trade the market effectively. And follow us on Twitter. I'm at Roy L. Maddox, and many times I'll post comments there that we think are important for you to view. And again, we hope you have a great trading day, and thanks for attending. And we will see you next month. Wes, you want to close? Anything?
I got nothing else. Thanks, everyone. Thanks for joining us for a good meeting. We'll see you next month.
Good night, guys. Sleep well.